Hey, everybody, and welcome to this week's episode of Coin Talk. Today, we're going to be talking about monetary policy, stagflation, and really the future of the dollar. Very excited, and this really affects all of us. We have some fantastic guests today. Of course, Josh Tolan joining. How you doing, Josh?
Hey, everyone. I'm a content producer at Celsius, and I'm excited to get into the content today with you guys.
Right on. Thank you for being here. We've got Jack Cruz, returning guest. How are you doing today, Jack?
Hey, how are you? Jack Cruz, neurosurgeon, teach physicians how to decentralize and gain time back.
Fantastic. And Simon Dixon, CEO and founder of Bank to the Future. Thank you so much for being here today, Simon.
Awesome. Thanks for being here. Looking forward to the conversation. A bit background. I published the very first published book in the world to include Bitcoin. Spoke at the first Bitcoin conference in the world, shareholder in over 100 different companies in Bitcoin, including Celsius, full disclosure. Been monetary reform has been really my topic.
Yeah, thank you for not only supporting the crypto community from the very early days, but creating the infrastructure so that a lot of us can join in on that. So I appreciate you being part of building this foundation. So bringing on the first question, I want to point to you, Simon. Yesterday, we saw Powell finally admit that this transitory inflation is not so transitory. And we've been moving along this path of there not being enough inflation to now it's good for us, right, as they want us to believe. So where do you think this train is heading, and where do you think it's finally going to stop, and what does it mean for the dollar?
Yes, so I've had a personal thesis on where this all goes ever since Bitcoin was launched. And obviously, where I was trying to share people with the history of money is when you deposit your money at a bank, the bank becomes the legal owner of your money. When they become the legal owner, they can spend it, and the supply is a function of debt. And so we have these debt cycles where individuals, governments, central banks, and businesses always have to create more debt in order to have more money. And if you want to have less debt, then you have to have less money, which causes deflation and the economic cycle. What we've been on the end of is a very large debt cycle with the dollar. The dollar has become increasingly more important as central banks all around the world hold it. And so we have entered into this interesting cycle where technology has created a real deflationary cycle as everything converges to free. And at the same time, inflation to me is the two concepts. It's factoring all the inefficiencies of creating money as debt and all the interest that needs to be repaid when you base your money on what I call the world's largest regulated Ponzi scheme called the dollar. And secondly, too much money chasing too few goods, which is economics 101. We've certainly seen both of those effects. And so I believe we enter into a deleveraging effect because we now have too much money. But then if we traditionally, if we wanted to control inflation, then you would put interest rates up and you send all the people that borrowed the money bankrupt so that you can have a downward pressure on debt. And so therefore you have less money in there, you have a cooling down of the economy. What I think we're seeing at the moment is a recognition that we have entered this level of interest where you can no longer use that monetary tool. And so I forecasted quite some time back that because Bitcoin invented money you can own, money you can spend, and money who has a fixed supply, you'd end up with this Bitcoin versus central bank digital currencies. Because in the book I talked about central bank digital currencies being the mechanism for central banks waging war on banks in order to deleverage the economy. So what I'm forecasting from here is that you have these systemic risk events in banks. And then in order to make sure depositors don't lose their money, you replace that money with a central bank digital currency. And that deleverages and somewhat controls the amount of interest which is being factored in when money is created, which then competes with Bitcoin, which is the exact opposite. And you have this really interesting, what I always called monetary renegotiation, where you have this changing moment, a Bretton Woods style moment, really, where these central bank digital currencies are being designed, and they're probably going to go beyond just the dollar as their backing. And so really we've hit a turning point in history, what I call the most exciting time in financial history, where we are seeing inflation now. That's starting to really hit people on the ground. Central bank digital currencies are in beta in order to wage war on the banks, which then is a deleveraging force. But that slowly transitions the US from a more capitalist ideal to a more socialist ideal to eventually a communist ideal, as our money and our governments and our central banks and treasury all merge into modern monetary theory. So the only way to save the economy is to issue the central bank digital currency, deleverage the economy, and then radically transform what made America great in the first place. So that's a long answer to your question.
Yeah, no worries. A lot of people don't realize the dollar is not backed by gold or backed by any hard assets, and people really don't understand that fiat is created out of debt, and without people borrowing money or banks creating these dollars into circulation, that there would be a huge economic collapse tomorrow. I think we've seen over the past almost 2 years now, the Fed is taking a very active part in the markets, and anytime there seems to be a slowdown in the rate of increase in the S&P 500, for example, they're using monetary policy to goose these markets, right? And we see this now in housing, we see this in all equities. Bond rates are unrealistically low. Do you think this is something they're just going to keep doing until they can't, or until we hit that moment where we have to kind of reset the currency onto a new standard and switch it with something like a CBDC?
Yeah, so I mean, they'll do this as long as they can, but inflation is the boogie monster that everyone said would come along, and now they have to admit that it's not transitory. It is actually a part of the vast amount of dollars that have been created and the vast amount of debt that has led to the largest wealth inequality divide that we've seen. And so they can't raise interest rates. If they raise interest rates, everyone on the poverty line, on the debt line, will have to default on their debt. That could end into a deflationary spiral. And then you have the whole, you've got these two forces. So you've got consumer prices, which are obviously going up. You've got asset prices. And then you've got technology, which is driving prices down, which is why so many people get confused. Do we have inflation? Do we have deflation? The definition of inflation is a bit more complex than people want it to be, because you have some things going down, you have other things going up. And the Federal Reserve is just taking the other side of the market. And so stock markets are really Fed-led markets, real estate markets are Fed-led markets. So as soon as they stop that, then you have to face what it is, but we've come too far. So I think they will roll over, and then CBDCs will come in to save the day, and then we remove private created money through the banking system and replace it with central bank digital currencies. And then people will see the true value in money you can own, money you can spend, and money who has a fixed supply. And so Bitcoin makes fiat better. Fiat will do things that Bitcoin can't do, and we end up in this really interesting time.
So, sorry to interject here, but Simon, when you're talking about the deleveraging event, so are you saying it's not going to be interest rates? It's going to be the CBDCs that are going to cause the deleveraging event. They're going to crush the banks, right? Okay, then they're going to be all powerful. How is Bitcoin going to do in that environment where the central banks are now all powerful, ruling with an iron fist and having control over everything? And then Bitcoin, are they going to coexist, or is one gonna overtake the other?
Yeah, I totally believe that they will coexist, and that's the model that we're seeing. The model that Celsius was involved in, which is save your Bitcoin and take out a loan in dollars for money that goes down in value, and save the money that goes up in value over the long term. And so the coexistence is something that I believe will happen. At one point, the whole argument around, will they ban Bitcoin? Well, we've got lots of evidence for what happens then. So I was in China 3 times when they banned Bitcoin. The price went down and then it hit all new all-time highs. So we already know what happens when a country bans Bitcoin. You get a reaction. And then you get the use case of people understanding it. Also, with the futures ETFs now, you know that pension funds now own Bitcoin. So to destroy people's wealth by banning Bitcoin when it's already in there, and they've already released infrastructure bills that says, well, if you can't beat them, tax them. So we've got over $1 trillion here of people that earned incredible wealth. It's probably headed to 3 to 5 trillion. Let's make sure we get our cut. So I believe that you do have the coexistence. The US has not played the moves right to get rid of an outright ban Bitcoin. They still can. It's still a risk. But we know that that the effect isn't there. So I believe you have the coexistence of Bitcoin, and I believe central bank digital currency is the future monetary tool and monetary policy for deleveraging and transitioning from free markets to more communist markets.
Yeah, and I could imagine that the Fed is going to end up taking over all commercial banks and just manage accounts and money directly instead of having this increasingly irrelevant third party of the commercial level banks operating. And we'll see how that goes. But on the other side of the coin, we have the country of El Salvador that is really leaned very strong into Bitcoin and is taking the entire opposite side of this trade, now issuing bonds against it. I want to ask Jack, what's really going down there, and what are the implications of an entire country monetizing Bitcoin in a brand new way?
Actually, I think the story in El Salvador, you guys know, I've been down there. I was there when they made Bitcoin legal tender. But I think the announcement that the Bitcoin volcano bond that they're going to get involved with is going to be a huge factor for both institutions and governments to begin to protect themselves from monetary policy that's being made in DC and actually in the EU and everywhere else in the world. Inflation fighting is going to be, a big deal, I think, for at least the next 2, maybe 2.5 decades. We can argue about when deleveraging happens. I actually think what Simon said when he was talking, it just made me think about the problem in a way that a neurosurgeon would, because I think about money as monetary energy and how it ties to time. Time's the most valuable asset. Well, what has Bukele done in El Salvador? He's actually decided to stop the time theft of money that happens in DC. So he's now hooked up the other decentralized network that we have in the world, which is nature, through the volcano directly to his own treasury. And because he has the US dollar, he's got 2 legal tenders. So he now has a hedge in his own country. And when Simon said that we're trending towards communism, most people don't even know that Bukele used to be a communist and he realized that was a problem. And I think as inflation is measured by zip codes and what you choose to put in it, the same thing is going to happen with CBDCs and Bitcoin. I think certain countries will use the CBDC, like China, I think, will be 100% of the way and try to keep people out of Bitcoin, whereas I think the United States is going to be exactly the opposite. I think there's a very significant chance Simon may see that the United States defaults more to a Bitcoin world and less to a CBDC over time. And then I think there's going to be countries like Canada and Australia that are actually in the middle. I think right now Australia is trending more towards China. I think Canada has the potential to do that as well. And I think when you realize what the goal is there, when they plug the treasury into nature, create Bitcoin, they just added another 100 coins. They're up to about 1,000 coins to their treasury. You're going to turn that place directly into what we saw in 1965 in Singapore. When they were freed from Malaysia, they basically said they wanted to become the strongest economy in Asia. Everybody laughed at them because they were small. And because of the way they handled money and the way they understood that it was really a time technology and that inflation is time theft, they became the 3rd largest economy in Asia, and they did it extremely well. I think Bitcoin in El Salvador, and I'm not trying to be hyperbolic here, I actually believe El Salvador has a huge gravity to pull a lot of people in to show them just how powerful they can get. And when we sit here in 2021, December 1st, and we look at them, we have a mindset of a country that just came through a civil war 21 years ago. My belief is that El Salvador is like looking at the United States, probably 1945, 1946. And do I believe 25 years from now, we may look at them as the model, as how we think about Singapore today?
Yeah, I think there's a lot of truth behind that. And I'm finding the statement of you don't change Bitcoin, Bitcoin changes you to be extremely true. And that persistence over time changes human behavior. And when El Salvador announced the Bitcoin city and almost zero taxes across the board, I said that is a sign of how Bitcoin can affect you and your governments and all policy behavior, all by having this single source of truth operating on a...
Let me tell you something. I want to interrupt you here because what you just said is so incredibly powerful. I want to put an exclamation point on it because I felt the same way when Simon was speaking. What we're all talking about and using different words to try to get to is when you stumble upon a time machine and you learn how to use it, you can become a billionaire using seconds. Turns out you can do it also with money. That's really what Bukele has bet on for his country. The thing is, we individually, collectively, all of us also make our own bets. And I think we see that in corporate markets. We've seen what Michael Saylor has recently just done. He is basically telling people around the world that if I did this, you should do it. Bukele is saying now we're doing it. The key question is, who's going to be the next person to stumble upon the time machine and learn how to use it to become a billionaire or a trillionaire? Remember, time is still the most valuable asset we have, and Bitcoin's probably the best way to link it. And that's part of the reason why Satoshi Nakamoto, if you look at it, the way I look at Bitcoin, Bitcoin is a clock. And if you know anything about physics, physics basically says about clock management that basically all clocks are flow meters for entropy. And when Simon was talking earlier, especially when he was talking about the Chinese and the Australians about CBDCs, the first thing that popped in my head, this is exactly what happens in a blue star. Blue stars consume all their energy fast. They go from hydrogen all the way up to iron, and then they blow up. The star that we live under, which is the G-class star, it takes a lot longer for it to go from hydrogen to iron. So that's more like what's going on in the United States. That's when we use the term kick the can down the road. But when we give these analogies, when we come and do podcasts like we're doing here, I want people who are probably in the fintech space that follow on the Celsius network, they get the finance. I deal with physicians, and physicians deal with time. People come to see us so they can live longer. And when I explain to them that Bitcoin really is a time technology, it's a time machine that you need to learn how to use, and inflation is effectively time theft from the government, once you optimize for it, everything changes. And that goes to your point that you made about Bitcoin changes people's behavior because it's fundamentally linked to time in our behavior and how we think about money.
Yeah. And I want to ask Simon, over the last 10, 12 years, we've over doubled the money supply, but we never saw inflation we never saw consumer prices going up in a meaningful way until this last year or so. Why is it that this monetary supply has been increasing, but all of a sudden it's caught up and now inflation is rapidly growing in consumer prices?
Yeah, well, it's again end of a debt cycle. So it's the rate at which we've been increasing since the pandemic was really, the final nail in the coffin. And also, it's only been saved by technological innovation. The amount of the internet has just really been converging everything to free. The open source movement. I talked in the book about the free economy and how everything is driving that, and that was all the only thing that really hid some of this. But the rate at which the supply has increased, plus the end of the just ginormous asset price inflation that's led to ginormous wealth inequality and the indebtedness and the level of indebtedness that needs to be factored in here. Getting back to the El Salvador side, this is probably the thing that I've been most excited about since going to attending and speaking at the first Bitcoin conference. This is such an important thing, and I don't think anyone realizes how important and how significant this is. So, to give the backstory, in 2014, at Bank to the Future, we released the first Bitcoin bond, and we could only find 17 investors to invest in it because it was way ahead of its time. But that turned out to be those 17 investors. I still track their performance since investing in the Bitcoin bond. It was the highest performing retirement plan I've ever seen, and one of the best products I invested in as well since then. Now, back in 2014, the Isle of Man government, where I live, invited myself and Max Kaiser to share how they could do a Bitcoin bond. And they wanted to do the El Salvador vision. And the government got all excited, and they did it way back in 2014. But shortly after making the announcements, the Bank of England got on the phone and said, if you back Bitcoin, we'll just remove clearing to your system. Then in Malta said, yeah, we'll take all the jobs. We'll do that. I think it was 2017, 2018. But they're bespoke to the European Central Bank. Here's what's different with El Salvador. El Salvador said, screw the Fed, screw the IMF, screw the Bank of England. The Bank of England doesn't give a shit about the El Salvadoran people, pardon the French. And we've got this entrepreneurial-led president that has recognized that the US, if they carry on where it's going from the freest, most successful market in the world to socialism to communism. And he said, well, let's use Bitcoin to go from communism to socialism to free markets. Let's create the freest market with Bitcoin City that the world has ever seen. And let's do what China did. What did China do? China said, well, we're the China Communist Party. And I used to live in Hong Kong, and they said, well, let's try on capitalism. We'll have this little corner called Hong Kong and Taiwan where we can do the capitalism, but we'll do communism in our mainland. And this is what you get to see now. Now, backing a bond by Bitcoin is the same bet that we're all making as individuals when we did the 2014 Bitcoin bond. Now Michael Saylor really popularized for corporations to transform their balance sheet. And then Paul Tudor Jones said, well, I'll put some Bitcoin in my hedge fund, and then all hedge funds are going to have to compete with Bitcoin returns. And so now we're getting El Salvador saying, well, we'll do it at the country level. What are we going to do? Well, we're going to denominate it in dollars. We'll pay people above inflation. I've been geeking out all week on this. So on my YouTube channel, Simon Dixon, I've been covering every detail on this. But they're paying a Bitcoin kicker. And if that Bitcoin kicker ends up paying down $17 to $20 billion of national debt, we already saw this with Bulgaria. In Bulgaria, the government confiscated a bunch of Bitcoins from some criminal enterprise. I don't know much about it. And already those Bitcoin were superseded the national debt of Bulgaria. What is interesting is those private keys just went down to corrupt politicians, and they never made it to paying off the national debt. But this Bitcoin-backed bond could be a cascading effect of David beating Goliath on a scale we've never seen before. If it works for El Salvador, it works for other countries. Everybody's watching. Full disclosure, at Bank to the Future, we're supporting in issuing this bond and allowing people to invest in this bond. But I think this is just about one of the best things that could ever happen to Bitcoin in this moment. And it's so significant. And it really is, if this works for El Salvador, it works for every other country. And quite frankly, it completely changes the world in so many ways that we've never seen. It is a wealth effect of deleveraging national debt in currency that goes down in value, the dollar, using currency that goes up in value, historically, Bitcoin, and just playing that trend and saying, do you know what? We don't need to control money. We don't need to be at the center of that. We can just use Bitcoin, and Bitcoin can do what it does. We can allow people to own their own money, spend their own money, and have a fixed supply. And we really don't need to be at the whims of any central bank or any, and this is going to get serious resistance. There's a lot of people that want this to fail.
Simon, don't you also think the way you characterize it there, it also is going to happen very quick? Because you have to realize they don't have a lot of debt. As you said, they've already got 1,000 coins on there, and they got their volcano hooked up to Bitcoin. So this is going to happen faster than people think.
For sure. I love how public they are with all this stuff, because it stands a greater chance at, causing a cascading effect with other countries. But we've been on the topic of countries that are positioned to go through this unique time period. But Simon, I'd love to get your opinion on what entities do you think are well positioned? You don't have to name names. Obviously, I'd love for you to name Celsius to give your opinion on that, because this is where I live here. But who do you think is well positioned to ride through and benefit from this unique time period?
Yeah, so when I look at the trends here, so when I've been investing in the sector over the last decade, I believe that just like you have a Bitcoin versus central bank digital currency world, I do believe you have a decentralized finance versus centralized finance world. And I believe that both succeed. I really genuinely believe that central bank digital currencies do succeed, and they become the dominant form of money. And you have Bitcoin competing, and Bitcoin regulates the regulator and creates fiat, more honest fiat money. I think there's that coexistence. And I do believe you see the same in the decentralized and centralized. So one of the trends is that regulators come along and they say, how do we get more control of this? We're not going to obviously let all the tax go out. We're not going to let the money launderers, and we're going to implement laws, and we need to control everything, and financial institutions need to do that. And so that ruins the user experience of money and financial products. And so the DeFi industry comes along and says, well, how can we tap in that? Then they regulate it, and then you have a technological cat and mouse game. But the innovation will always outpace regulations. The regulations will always calm down. Just like we saw with the ICOs, and then that led to DeFi. And I think you see that constant. I believe the investment thesis is really simple. The future of finance looks very different from the past. It's the most exciting time to be alive in financial history. And I want to invest in everything that's going to be a part of that. I believe that every single financial product gets disrupted, one product at a time. I think there's a bunch of risk involved in that. And I believe that the investment banks of the future, the banks of the future, the central banks of the future, and everything is being built. And it came from this tiny little experiment of 20 to 40 people in a room at that first Bitcoin conference, and just this amazing cascading effect that we've seen since. So I'm proud to be a shareholder in Celsius, and I think that the next generation of financial products are all being built. We've seen it. It's a couple of $1 trillion across the sector. And you just got to be diversified. There's many companies that I've invested in over that time that failed, crashed, and burnt. And there's some that became multi-billion-dollar unicorns, from Coinbase to Kraken to Celsius to Bitstamp to Bitfinex and everything in between. So it's a really exciting time. And then the country level, that's just the final most exciting part of it. Where does this all end? Well, I said David beats Goliath. That's what Bitcoin is. Bitcoin should never have succeeded. It should have got crushed ages ago, but it did succeed. It's got this far. It is where it is. That can't be reversed. So who is going to be the power? So El Salvador comes along and says, well, we'll issue a bond. We'll bet on Bitcoin. We'll bet our country's future. We've got no alternative. What are we going to do? The very last person to buy Bitcoin will be the Federal Reserve, I believe, personally. And the Federal Reserve, why? Because they have the most to lose. So you have this cascading effect where countries say, we'll build our bonds on it. Then central banks come along and say, we'll put some of that on our balance sheet. And the first central banks to do that will be the ones that you've never heard of, the Bahamian central bank, or the ones, because this is David beat Goliath opportunity. The ones with the most power and the most entrenched interest will be the last ones to buy Bitcoin. And then maybe just Peter Schiff will be the very final one. And then he probably won't buy it because the Federal Reserve will say, oh, if the Fed's buying it, it must be a scam. It's a Ponzi scheme. And so eventually Peter Schiff will have to pass it on to his children, and then his children will go and take all his gold and buy Bitcoin. But it's really those types of things. I think the first largest central bank, if I were to bet on one, I'd say Japan. But I think before that, you're going to see a lot smaller ones. You're going to see a lot of governments. And here's the beauty: just like Bitcoin in the early days, the more people that think that Bitcoin is a Ponzi scheme, a currency just for drug dealers, a get-rich-quick scheme, a scam, the more you have the opportunity to benefit from Bitcoin being more of a speculative store of value before it eventually becomes like gold and an actual store of value. The same with countries. The earlier a country adopts, the more that they get the exponential growth versus the end of it. The day that the Federal Reserve buys, that's when you have essentially the end of the dollar, and Bitcoin probably acting more like gold, where it preserves your wealth rather than generates wealth. Until then, we've got the wealth generation effect as we get this game theory of individuals, businesses, and that's the beauty here. Individuals front run the businesses, businesses front run Wall Street front run the countries front run the central bank, and then you end up with the Fed as the last one. If you do see America and the Fed decides that they're going to get on the right track to that, that's the smart move. I'm not sure whether they are. They probably will. I'm not sure whether the Constitution stands here and that you don't get communism in America. Maybe you do. And the sooner people can adjust to that, the sooner America gets on the right side of that trend, then America has, the ideal opportunity to crash a dollar but remain a superpower economy.
Simon, I think we're going to see the answer to that in the next 11 months because of the midterm elections that are coming.
Yeah, really that's a whole another conversation. We'll have to do an episode on how Bitcoin is now actively affecting politics and freedom all around the world. So we'll save that for next time. But thank you all for joining this week's episode of Coin Talk. Thank you, viewers, for joining us this week, and we will see you next time.
Thank you, gentlemen.
Take care.